Hello and welcome. Thank you for joining us on Business Incorporated, coming to you live from Lagos. I'm Chimeze Obi-Iwa. We're coming up on the program. Nigeria plans to continue to engage with international investors as it explores fundraising options after a non-deal roadshow in London earlier this week. Mozambique president fires his finance minister, who has been embroiled in more than 2 weeks of negotiations with Russia's VTB bank over a late $178 million loan repayment. Plus, global stock markets fall ahead of the UK's referendum on European Union membership. We'll begin in Asia, where stock markets fell as investors retreated to safer assets ahead of the UK's referendum on European Union membership. The MSCI Asia Pacific Index fell by 1.1%, the most since May 13. Japan's Nikkei 225 index fell 0.4% to end the session at 16,601.36 points, and the broader topics dropped 0.5%. Australia's S&P ASX 200 index closed 0.9% lower, while New Zealand's stock market ended flat. South Korea's Kospi fell 0.3%. Hong Kong's stock markets resumed trading on Friday after being shut yesterday for the Dragon Boat holiday and was down 0.8%. Mainland China and Taiwan remain closed for a second day. Well, let's cross over now to Europe to see what's happening there. DWTV Channels TV correspondent Conrad Busen joins me now. Good afternoon, Conrad. Now, Conrad, ahead of UK's referendum on European Union membership, we've seen equity markets lower again, and that's exactly what we're seeing in Asia. What's the picture like in Frankfurt, and what's the weekly performance of European stocks so far?
It's been a very weak week here for the German equity market as well. The German DAX, if we compare it to last Friday, it's down 2.5% at the moment. And on a 2-week scale, the decline is even stronger. The DAX is down 4%. And Brexit, the discussion about a potential exit of the United Kingdom of the European Union, is really quoted as the most important factor for this. Today we've been getting proof that this discussion about Brexit is not only having a negative impact on business sentiment, it really does have a negative impact on business as well. The Institute of Chartered Accountants of England and Wales reported today that business confidence is at the lowest in 4 years, and business investment is down in these countries 4% already this year. That's much stronger than the performance and business investment development last year. So very negative influence on this on the investment readiness of companies in the UK to invest. This uncertainty about Brexit has caused investors to search for what's called safe haven investments. Corporate bonds, government bonds are considered to be more secure investments than company shares, and that's why we've seen investors getting into bonds strongly this week, but as I said, shares are really not in demand.
Well, Conrad, I can actually see the level of the bearish trend there behind you. France and Italy reported an increase in industrial production. Why have these failed to have an impact on the market?
Yes, and not only France. We've been getting strong numbers from Germany this week as well, but it looks like really the Brexit discussion, the psychological effect of this overlaps everything at the moment. And there's something else. We have a monetary policy meeting next week in the United States. The Federal Reserve will talk about interest rates. Nobody really expects the Fed to start raising interest rates next week, but investors have a tendency ahead of such a meeting to be reluctant and also rather go for safe haven investments. And speaking about France, It's true the numbers, industrial production numbers for the month of April were stronger than anticipated, but during the month of May and also at the moment we have been seeing and we are seeing lots of strikes there. So it's quite probable that the numbers for the months of March and the current month of June will not look as good as April. And something else one trader told me, he quoted the Euro football championship, which is happening in France. It's starting today. It's quite possible that this will have an effect on the French economy like an early summer holiday. It might be good for consumption in France, but not so good for the manufacturing sector, for the industrial sector, because so many people in France will be watching football for 4 weeks.
Well, Conrad, let's talk about that football right now. Oh, the Euro 2016 championship, of course, kicking off today. Any new predictions where you are about the outcome of the tournament? Earlier this week, an analyst at UniCredit Bank tried to predict the outcome of the Euro Championship using statistical and economic methods.
Yes, UniCredit this week said that France and England would get to the final and France would beat England in the final. I found a new survey today. Scientists of 2 universities here in Germany, Berlin and the city of Gießen, they predict that Germany, believe it or not, will be the next European football championship. And the method they applied was the market value method. They just took the market value of the different teams that compete against each other in the Euro Championship, and they found out that the German team is the most expensive one, worth 562 million euros. Whether or not this is really going to be a valid and useful tool for forecasting the outcome remains to be seen. You know, Spain's team is worth nearly as much as the German team, 560 million euros. France and England, those teams are also very expensive, around about 480 million euros. So they're all very expensive, they're all rich and highly professional players, and I think maybe this method is a bit simplistic. It takes out the surprise factor out of the game. We shouldn't look too much into statistics like that and just start watching football, I guess.
Well, Conrad, of course, we have to watch that football, and we've got 1 month to get to know the winner. Thank you very much for your time, Conrad, and enjoy your weekend. Conrad Busen, DWTV, Channels TV financial correspondent, talking to us there from Frankfurt Stock Exchange. While the Dangote Group, Africa's leading indigenous conglomerate, has become the latest corporate organization to join the African Export-Import Bank as a shareholder. Dangote Group completed the process of acquiring equity in the bank on May 30 this year with a substantial investment. The president of Afreximbank, Dr. Benedict Omar, said the investment was a strong vote of confidence in the bank by arguably the largest indigenous corporate organization in Africa. The board of directors of the African Development Bank Group, through its private sector window, has approved a $150 million line of credit to United Bank for Africa PLC. This line of credit will be used to fund various infrastructure projects, particularly power, telecoms, transport, and also social infrastructure such as hospital and education facilities. By leveraging UBA's network, the LOC would also scale up lending in both urban and rural areas to create more jobs and to promote inclusive growth for Nigeria's economy by stimulating the various sectors such as manufacturing, construction, agriculture, education, and services. And after failed attempts to raise new equity funds from existing and new investors, the board of UAC of Nigeria PLC has discontinued the 160 million ordinary shares right issues and opted to finance ongoing restructuring and investments within the group with internally generated funds. At the annual general meeting of the company yesterday in Lagos, the chairman UAC of Nigeria PLC, Mr. Dan Abo, said the group decided on internal funding after attempts to raise new equity funds from strategic investors and existing shareholders were frustrated by the slowdown on the Nigerian capital market. According to him, the company has concluded plans to restructure the operations of 3 of its subsidiaries, UAC and Property Development Company PLC, Livestock Feeds, and Portland Paints and Products Nigeria PLC. And what are foreign investors thinking about the delay by the CBN to come up with a framework for the new forex policy regime? Find out after the break.